Hi there. The dividend of ZIM has reached a yield around 51%, and the price to earnings is less than 1, 0.7. If you look at the market cap, 1.6 billion. Now, they pay this dividend. If you look at the history of this company, the dividend history, you can see here, they paid this dividend on April 3rd, 2025, $3.17. And the most important question is if they continue to pay this high dividend, over 50%. Because if you look at the past, the history of this company, especially the dividend history, you can see that over the years, from its IPO, they paid high dividends. $3, $6, $4, $17, and other dividends. And you look at the stock price, compare this dividend of $17 with the stock price of only $13, only from dividends you make more money than the current stock price. So this is quite huge. Like, you buy this company right now and you double your money only from dividends, plus possible appreciation in the stock price. So this is like a great investment. Now, what's the catch with this company? Because if you invest right now, you have to predict if they are able to pay this high dividend. So how can you predict this? So let's look at their numbers, what they reported and what they expect for next year, 2025. I mean this year, 2025. You see that in 2024, right? The revenue was about $8 billion. And net income, their earnings, were around $2.1 billion. High earnings. And they have a policy to pay 45% or 44%, depends on the year, of their net income in dividends. And that's why for 2024, the total dividend was close to $8 per share, more than 50% at the current price. You can see here. So, 2024, they made in earnings $2.1 billion. So, to predict the next dividend for 2025, you have to predict their earnings. And they also provided an outlook. You see here, they expect for 2025 the adjusted EBITDA to be around 1.6, better said between 1.6 and 2.2 billion, and adjusted EBIT, earnings before interest and taxes, to be between 300 and 900 million. Of course, the final earnings will be lower because those are earnings before interest and taxes. So you might expect between 200 and 700 million. Let's say they deliver this number. They make 900 million in earnings. I mean less than that, 800 million, because they have to pay interest and taxes. 800 million in earnings. Now, if they pay 45% of the net income in dividends, that means if they make 800 million in earnings and they pay 400 million, you divide 400 million by the current market cap of 1.6 billion, and the dividend yield is around 25%. Do the math. If this company makes 800 million in earnings in 2025, so you still have a high dividend around 25% for 2025 if they deliver these numbers, what they expected. They are still good. To have a dividend yield about 25% only from this company is quite amazing. And when you look at their history of paying dividends over the years, it's quite high. And this may happen. They have their chances. Now, another important thing I want to show you is about their outlook. You know, it's quite hard for them to predict their earnings. I will tell you why later in this video. First, let me show you something important. Look at 2024. At the end of 2023, they made 5 billion in revenue and a loss of 2.6 billion. Of course, their loss wasn't 2.6 billion, but around 600 million because they had an impairment. Now, pay attention, close attention to this. Their guidance for 2024. They expect their adjusted EBIT, earnings before interest and taxes, to be between a loss of 300 million and a profit of 300 million. But guess what happened in 2024? They didn't deliver a loss or a profit of 300 million, but, surprise, they delivered here a profit over 2 billion. So when you compare their outlook, you look at their outlook, their prediction, they might be low or high. You never know what can happen with their earnings. They might be down or up 2 billion as it happened in 2024. So you can check for yourself. 2 billion. So how can you trust this outlook? Maybe in 2025, they will deliver 3 billion in earnings or 5 billion. Imagine what will happen. 3 billion in earnings. That means 50% of their earnings in dividends, 1.5 billion. And the dividend can reach close to 100%. That will be amazing. Amazing. But again, what's the catch? How come they're not able to predict their earnings? To rely on their outlook. Well, because this company, as you probably know, offers shipping services. And those shipping services depend on freight rates. If they go up, higher prices means higher revenue for ZIM and more earnings. If they go down, less revenue and less profits. And if you look at the revenue over the years and compare it, you can see that when rates are up, also the revenue and profits are up. When rates are down, also the revenue and profits are down. Let me show you here, which is quite important. 2024. Here. You see freight rates, the average, were around 1,800. When rates are around this level, 1,800, they're able to make here in revenue over 8 billion and a profit over 2 billion. Right? You can see here. Now, pay close attention to this. When rates are about 1,200 for 2023, for instance, they make in revenue 5 billion and a loss of 2.6 billion. Of course, this is not the real loss. The loss is around 400 or 300 million. Because you look at earnings before interest and taxes, they were 422 million. But because they had an impairment of 2 billion, they reported a higher loss. But still, for 2023, at those rates, they are not profitable. They reported a loss. How do I know this? Well, if you read the notes for 2023, net loss totaled 2.6 billion, including a non-cash impairment charge of 2 billion. So if you subtract their impairment, their final net loss was around 600 million. So keep in mind that when the rates are about 1,200, they report a loss of 600 million in their earnings. When rates go higher, close to 1.8 thousand, they are able to make over 2 billion in earnings. So now you compare these rates with the current index, freight index. They are around 1.4 thousand, close. So how much profits will they make? Well, it also depends how those rates will fluctuate in the future. If they go up back to here, 2,000 or 1.8 thousand, then ZIM will make a profit, a higher profit than what they expect for 2025 here. That's why they provide this range between 300 million and 900 million at the current rates. But if rates go higher, than expected, they will make more. If they go down, they will make less. So how can you predict those freight rates? How can you do that? Well, you look here at the volume by geographic trade zone. And you can see that most of the volume comes from Pacific. Let's look at 2024 better, right? So most of the volume comes from Pacific, intra-Asia, and Latin America, then Atlantic and cross Suez. But as you can see, Pacific represents a big part of their volume. This means a big part of the revenue and a big part of their earnings. And where is located this route? Well, you look on their website. Let me show you here. North Pacific Ocean, right? Pacific. So the route is between North America and China. And to predict the future rates of this route, which represents a big part of the revenue and earnings, you have to predict the trade between China and North America, especially the US. And how can you predict that? Well, you look at the news. For instance, trade war between China and the US. As you can see, China responds to Trump's 145% tariff with an 125% tariff on all US imported goods. What does it mean, this news? When you have higher tariffs, then the trade gets lower, declines, right? It's obvious. And as this zone represents a big part of the revenue of ZIM, you can see here Pacific quite high, then also ZIM is affected. And if you look at the stock price year to date, you can see that from when the trade war started, April 1st, the stock price was about $16 and then a decline of 14%. So if this trade war continues, ZIM will be affected because the volume will decrease and they'll make less money. But my prediction is that they will make a deal between the China and the US in the long term. In the short term, the market will be bloody. Then to predict the other routes, again, you take every route and look at it. Between Latin America, intra-Asia, Atlantic, and cross Suez. You do the work, you look at those regions, and see what can happen. Now, to tell you short, the other routes are not that problematic. Latin America, I'm sure that they will continue. Intra-Asia, look on the map. I don't see here. This is the route. I don't see any problem here unless there is a war between India and China. The only problem I see for the moment is cross Suez. To look at the map. Cross Suez here. As you probably know, Yemen declared attack to the US Navy. And here is a problem. But as this represents only a small portion of the revenue, won't be that a big problem. But still, you have to be aware because one tiny thing can affect those freight rates. Of course, if there is war in that region, that means the rates go higher. And ZIM will be able to make more money. That's good. But here with the US, the trade war, this means lower volume. If they continue, of course. And if they have lower volume, they have less revenue and less earnings. So in this way, you can try to predict those freight rates. Right? Now, if you put a gun to my head and ask me what price would I pay for this stock, ZIM, with a huge dividend, then this question is available for members. If you want to know the answer, and by the way, if you look at my past videos, I predicted every decline in the stock price of ZIM. Don't forget that. So if you want to know the answer, you can join my membership. And to do that, you go to my profile, press join, and scroll down to choose the level you want, and press join. And if you have other questions, please let me know in the comments.